Welcome to the Deep Dive, your ultimate shortcut to understanding the companies that truly move the needle.
Today we're digging into ADP.
Yeah, ADP, a powerhouse that, well, behind the scenes helps over 1 million businesses.
A million, yeah. And 42 million workers navigate the world of work every single day.
It's just a massive, dynamic ecosystem. It affects almost all of us, really.
Often without us even realizing it, right?
Exactly. So the big question we're tackling is, how is a company this huge, not just navigating, but actually thriving and innovating?
Especially now with all the economic shifts and, the rise of AI.
That's right. So this deep dive, it's all about pulling back that curtain on ADP's recent performance.
Yep, and their plans for the future.
Yeah.
We've been looking through their fiscal year 2025 earnings call.
The transcript, yeah.
And the press release that went with it.
And our mission for you, listening in, is to give you that shortcut. We're cutting through the jargon.
All the financial speak and analyst questions.
Right. To get to the really important nuggets, we'll uncover ADP's strategy, how they're handling the macro stuff.
And what innovations are really shaping their future.
You'll walk away with a quick, solid understanding. No information overload.
And hopefully some surprising facts, maybe a few aha moments. You'll be well informed about a company that honestly impacts so many, but often flies under the radar.
Okay, let's jump right in then. Fiscal year 2025.
Yeah.
It looks like, from what we've seen, a really strong close for them.
It really was. For the full fiscal year 2025, ADP showed robust performance.
So what are those top-line numbers telling us about their financial health?
Okay, so they reported $20.6 billion in revenue. That's 7% growth. Solid.
7%, okay.
And their adjusted EBIT margin, that's, earnings before interest and taxes, a key profitability measure.
Right.
It expanded by 50 basis points, 0.5%, reaching 26.0%.
26% margin, that's pretty healthy.
Very healthy. And adjusted EPS, earnings per share, grew 9% to $10.01.
Wow. Okay, so those figures really do point to strong financial health, consistency too.
Absolutely, consistently delivered.
Those are compelling numbers. And it kind of sets a high bar for their next fiscal year, doesn't it?
It does.
All right, let's dig into their employer services segment. ES, they call it.
Right, ES.
How did that part of the business do?
Also strong. 7% revenue growth there as well.
Okay.
Now, new business bookings, they came in at $2.1 billion for the year.
Which is?
3% growth. Now, ADP did acknowledge this was below expectations.
Ah, okay. Below expectations, but still growth.
Still growth, yeah.
Yeah.
Especially considering, the macroeconomic uncertainty out there.
Right.
And the growth was pretty solid in their small business suite and domestic enterprise offerings.
Okay, you mentioned below expectations. Where exactly did they see that softness? In the bookings, what's that about?
Well, the main areas were in HR, outsourcing, HRO, and international bookings, especially in Q4.
HRO, those are the big complex deals, right?
Yeah, exactly. Large, complex, lots of decision makers involved. So ADP's take is that this often leads to delayed decisions.
Ah, delayed, not necessarily lost deals.
That's their point. Delayed, not canceled. They
Sure.
emphasize the pipelines are still active, even up year on year.
But you have to wonder, in a competitive market, do those delayed deals sometimes end up going elsewhere? Or can ADP just wait them out?
That's a fair question. I mean, competition's always fierce. But ADP's client retention is really strong. They have these long-standing relationships.
Suggests they have staying power.
Exactly. They probably do close a lot of those delayed deals eventually. Their reputation, the breadth of what they offer, it gives us an edge.
Okay. And despite those booking challenges, they did highlight some big wins. You mentioned retention.
Yeah, absolutely. Client retention exceeded expectations, hit 92.1% for the year.
92.1, that's high.
It's very high. A 10 basis point increase, and it's getting close to their record, which was 92.2%.
Wow. And they link that to?
They link it directly to record high client satisfaction scores across the company.
So product investments, service improvements, that's paying off.
Seems like it. Foundational trust, too. Oh, and also, U.S. pays per control.
Which measures?
Kind of the number of employees on their clients' payrolls. That increased by 1%.
Okay, so steady growth within their existing client base, too.
Yep. Continued steady payroll growth.
All right, so that's employer services. What about the other big piece, their PEO segment, professional employer organization?
Right, the PEO. That also had a strong year. 7% revenue growth for fiscal 25.
Okay.
And what's interesting there is that the PEO new business bookings growth actually accelerated
Oh, really? Accelerated in Q4.
in Q4 and for the full year. And average worksite employee growth, WSEs, was 3%.
How many employees is that, roughly?
Reached about 761,000 in Q4 and averaged 748,000 for the whole year.
So demand for that co-employment model where they handle HR, payroll, benefits, that's growing.
Definitely seems to be.
Now, something many people might not know about ADP's model is the client fund's interest revenue.
Ah, yes, the float.
Explain that. How big a deal is it?
It's huge and often overlooked. Essentially, ADP holds client funds for payroll and taxes for a short time.
Days, maybe weeks.
Exactly. And they invest those funds. For fiscal 25, the interest they earned on that float increased by 16%.
16%. To how much?
To $1.2 billion for the year.
$1 billion just from interest. Wow.
Yeah, the average client funds balances they held went up 6% to $37.6 billion.
$37 billion.
And they earned an average yield of 3.2% on that.
That's a massive advantage, isn't it? It must help fund R&D.
Oh, absolutely. It gives them incredible firepower to invest in AI, new platforms, even when the economy slows down. Makes them more resilient than a lot of competitors.
It really shows the scale and the financial leverage they have.
Pretty powerful.
Okay, so beyond the numbers, let's talk strategy and innovation in FY25. This is where it gets really interesting, seeing how they're shaping the future.
Yeah, they definitely made some big strides here.
Yeah.
It ties back to that always designing for people idea.
Right. So on the innovation front,
ADP Lyric, HCM, that's their next generation human capital management platform, payroll, benefits, talent, the whole suite.
Lyric, okay. Gaining traction.
Significant momentum, they said. The number of clients sold jumped by over 50% in fiscal 25.
50% increase.
Yeah. And live clients doubled. The pipeline's growing. And they're winning clients from all sorts of competitors.
That sounds promising for them. And what about AI? Everyone's talking AI.
ADP Assist.
Right.
That's their AI capability.
Yeah.
It saw millions of interactions in fiscal 25. Clients are engaging with it.
Okay.
But what's really interesting is they've also deployed these AI tools internally.
For their own staff.
Yeah, there's thousands of their associates in
Yeah.
sales, service, tech, driving internal efficiencies.
So using AI to improve their own operations, too.
Exactly. Combining their decades of experience with these massive data insights to make things smoother, better for clients.
Makes sense. And their global reach is a big deal, too. What happened there in FY25?
Well, they expanded into new growth markets, Japan and Saudi Arabia.
Okay.
They also bought a payroll business, PEI, down in Mexico.
Strategic acquisition.
Yep. And they enhanced their embedded payroll offering, too, making it easier for small businesses to integrate ADP.
Right. Embedded payroll. We'll come back to that. And wasn't there another acquisition? Workforce software?
Yes, workforce software, that was a big one. It significantly boosted their capabilities in time and attendance.
So handling complex scheduling, compliance, that kind of thing.
Exactly. Especially for larger clients with complex needs. It makes their overall workforce management offering much more comprehensive, bringing more under one roof.
Okay, so FY25. Strong close, lots of strategic moves.
Definitely.
But the real test is always looking forward. What's the guidance for fiscal year 2026, especially with this uncertain macro backdrop they mentioned?
Right. So for FY26, they're projecting consolidated revenue growth of 5% to 6%.
5 to 6%, okay.
Yeah. They expect adjusted EBIT margin to expand again by 50 to 70 basis points.
More margin growth.
Yep. And adjusted EPS growth of 8 to 10%.
8 to 10% EPS growth. So still pretty confident despite the uncertainty.
It reflects their confidence, yeah. They plan to keep investing for growth while still delivering, solid financial results, even with the uncertain economy.
Okay, let's break that down. Employer Services outlook for FY26. Revenue. And what about those bookings?
Yes, revenue growth, they project 5% to 6%, same as the overall number.
Right.
And here's where you see that confidence. New business bookings are expected to accelerate
Accelerate to what?
to 4% to 7% growth.
Okay, that's a jump from the 3% in FY25. Why so confident?
It's not just hope. They point to continued investments in their sales team, the tools they use,
Right.
and also the continuing maturity of those strategic offerings we talked about. Lyric, workforce software, embedded payroll. They're seeing those investments really start to pay off.
Makes sense. They've laid the groundwork. But what about client retention? Can they keep up those near record highs?
Being a bit cautious there, calling it a prudent forecast, meaning they expect a slight dip, a decline of 10 to 30 basis points from that 92.1% they hit in 25.
Okay, but why? Are clients leaving?
No, that's the key point.
Yeah.
They say it's not about voluntary attrition clients choosing competitors. That still looks strong.
So what is it then?
It's more about the macro environment. They anticipate a continued moderate slowing and potentially some increase in small business out of business levels.
Ah, so it's broader economic factors hitting their client base, not ADP's
That's
service.
the distinction they're making, yes.
Mm-hmm.
Oh, and U.S. pays per control, they assume 0% to 1% growth. Kind of reflects a gradual slowdown in job growth.
Okay. And foreign exchange.
Expected to be a modest tailwind. So a small positive boost to reported numbers.
Got it. And that client funds interest revenue, that billion-dollar stream, what's the FY26 forecast?
Still growing. They expect it to increase to between $1.29 billion and $1.31 billion.
Even with potential interest rate cuts.
Yeah. They anticipate the average yield they earn will actually tick up slightly to 3.4%.
Interesting.
And they see the balance is growing 2% to 3%. So this stream remains a really key driver for ES margin expansion.
Even if it's partly offset by their growth investments.
Exactly.
Okay, what about the PEO services outlook for FY26? Any different dynamics there?
PEO revenue growth is projected at 5% to 7%.
Similar to ES.
Similar headline number, yeah. But they also gave a number excluding zero margin pass-throughs.
Zero margin pass-throughs. What are those?
Think of things like certain insurance premiums. Costs ADP manages for clients doesn't mark up. They boost total revenue but not profit.
Ah, okay, so excluding those.
Growth is projected at 3% to 5%. And average worksite employee growth 2% to 3%.
Got it. And PEO margins.
Expected to decrease slightly.
I'm curious, why is that?
Partly because those zero margin pass-throughs are expected to grow faster than the core PEO revenues. Also, a moderation in wage growth impacts them, and lower state unemployment insurance costs compared to FY25.
Okay, so a few moving parts affecting PEO margins.
Right.
Let's circle back to AI. ADP keeps highlighting their vast data set. 42 million workers paid, 1.1 million clients. Okay, unpack this. What does this actually mean for the future of HR tech and for us, the users?
Well, it means they're aiming for like a whole new level of intelligence. It's not just big data. It's incredibly rich data about how work actually happens globally.
Real world stuff.
Exactly.
Yeah.
And that data is absolutely critical for moving beyond simple AI, chatbots answering basic questions towards more advanced autonomous agents. AI that can actually do complex tasks, take action, without needing constant human input.
Wow, autonomous HR agents.
That's the direction. And they stress they've built proprietary tools to develop these agents responsibly. Compliant, explainable, secure, which is vital with sensitive HR data.
So the data lets them build smarter, more tailored tools that feel more intuitive.
That's the idea. Deliver HCM agents that really differentiate their products, make them more proactive for the user.
And what's the tangible benefit for clients? What does this AI actually do for them?
Well, the goal is driving operational efficiency, cutting down on service friction, less back and forth to get things done.
Smoother, faster HR tasks.
Right. And just enhancing the overall client experience, making it more intelligent. But they did note they're still investing heavily here.
Spending money to make money, basically.
Tens of millions still being spent to deploy these AI capabilities, both internally and for clients. It's a big long-term bet for them.
Okay. Acquisitions and partnerships also seem key to their strategy. Workforce software, how's that going?
Going well, apparently. Strong contribution to bookings, exceeded expectations on integration and co-selling with ADP products like Lyric and Global View.
So they're selling it together, effectively.
Yeah, and they seem really bullish on the multinational opportunities. Seeing good traction there, especially for clients needing complex time tracking across borders.
And what about next-gen workforce now? I think you could even see demos at SHRM. What's the impact there, especially for the mid-market?
Yeah, next-gen workforce now is a big part of why they're confident about bookings acceleration in the mid-market.
How so?
They're seeing really positive client satisfaction scores. The implementation experience, which is huge for new clients, is better.
Smoother onboarding.
Right. And significantly fewer client contacts needed to sort out issues. So it's getting rolled out more broadly and clearly making a difference for those mid-sized businesses, simplifying things.
Okay. And the Fiserv-Clover partnership. Embedded payroll for small businesses. Sounds like a longer game.
It is, yeah. Highly collaborative partnership. The Run offer, ADP's small business payroll, is already deployed within Clover for some Fiserv clients.
So payroll right from the point-of-sale system.
Pretty much. And the plan for FY26 is a broader rollout across Fiserv's base, plus integrating Cash Flow Central into Run.
More financial insights for small businesses?
Exactly. But the real bookings impact from this partnership, that's mostly still to come. It's a big, long-term opportunity for ADP to get really embedded in that small biz ecosystem.
Makes sense. Any other smaller pieces worth noting?
Briefly, Wisely and earned wage access.
On-demand pay?
Yeah, daily pay options, things like that. Seeing good client satisfaction there. Employee payment preferences are changing fast, as ADP's own Today at Work report showed. They're researching these trends too.
Adapting to how people want to get paid.
Right.
Okay, big question. The competitive landscape. There have been some big mergers in HR tech recently. Has that changed things for ADP? What's their take?
Their official stance is pretty clear. Not a whole lot has changed for them competitively.
Really? Despite the consolidation?
They emphasize they compete effectively against these players, whether standalone or combined. They seem very confident in their own offerings and service.
And they point to?
Their strong retention rates, consistent client growth. They see that as proof they're holding their own. It's still competitive, no doubt, but they feel their scale and innovation keep them well positioned.
Okay. It really does seem like all these pieces, the financials, the strategy, the tech, they all tie back to that core ADP philosophy.
Always designing for people. It's right there in the logo.
Yeah. It feels like people, the employee experience, the client experience, are really at the center of their decisions. From finance strategy to AI development.
I think that's the thread, yeah. Using all that data, all that tech to build a world of work that's, smarter, easier, and ultimately more human-centric.
So there you have it. We've really unpacked ADP's strong fiscal 2025, robust growth, great retention, big strides in innovation like Lyric HCM and AI.
And a clear path for 2026. Aiming for accelerated bookings, continued investment, leveraging acquisitions like workforce software.
Right. Even with that uncertain macro picture, their focus on innovation, harnessing that massive data set with AI, it positions them to keep shaping how we all work.
It really shows how a company like ADP isn't just, reacting. They're actively investing design and solutions trying to anticipate what's next for work.
So as technology keeps evolving, AI gets woven deeper into our work lives. Here's something to think about. How will these autonomous agents, these smart, tailored HCM agents, how will they fundamentally shift the role of HR inside companies?
And what new skills become critical? For employees, sure, but also for HR professionals themselves in this new landscape.
Something to mull over. That's our deep dive for today.